The 2026 midterm elections are coming up very soon. So the Trump administration has been looking to put forward some things that help the average American and the affordability question. We know that inflation's been just bananas. Now, I would tell you from a housing perspective, there's been a number of things that they've put forth. It's just going to be a question of whether we think these things are actually useful or not. My name is Nancy. I am a realtor here in Northern New Jersey, and in my 20 years in real estate, I've sold over $500 million with Nancy Chu Homes. So let's start number one. Let's just sort of highlight some of the things that have been thrown out there, and let's see what we think. Number one, mortgage market intervention. The administration has said, Fannie Mae, Freddie Mac, go and buy $200 billion in mortgage-backed securities. Now, I believe year to date, they've already bought like 50 to 70 billion. So they are, being asked to do more. This is potentially good in that it will prove that the mortgage-backed securities are secure, which could then allow the mortgage companies to feel a little more safe making the loans and could improve the spread between mortgage rates and also that 10-year treasury, which would be great because that could lower rates. Looking forward to seeing how that pans itself out. All right, number two, and this is kind of, one that was thrown out there, didn't gain a ton of traction, and that is the idea of a 50-year mortgage. So the concept being that with the 50-year mortgage, you're buying a house and then the payments are amortized over 50 years instead of 30 years, which is the 30-year fixed. The 50 is a tough one for me because the rate on that, you are paying so much more in the long run for the the baseline of your loan because you're paying interest over an extra 20 years. So the 30-year would certainly make over the long run make it be a better choice, but the 50-year could allow you to have a little more buying power. But is it really worth it in relationship to the long run? My instinct is that if you opt for a 50-year mortgage, I would refi as soon as the rates come down enough to make it a good idea to do so. Number three, the banning of institutional buyers for single-family homes. This, I guess, is pretty good. The idea that if you are a large institutional investment-based business, then you can't touch single-family homes. And by the way, there are a lot of sort of states and municipalities that have some of these restrictions in place as well. I would tell you the biggest challenge with that is institutional buyers. Well, first of all, how are we defining institutional buyers? How big do you have to be considered one? And the truth is they really only own a rather small portion of single family homes in this particular country by comparison to all the inventory. So while that would give us a little bit of relief, it probably won't give us enough. All right, number four, and this is kind of, a newer one. It was just sort of brought to light in the idea of being able to use 401k funds for home down payments, right? So the idea is that you can tap into your retirement savings for down payments without without tax penalties. I would love to hear more about this because the details are pretty murky right now. Does Congress back it? It's hard to say. My biggest thing with this one is that, about 55% of Americans actually have retirement funds. That means that 45% of Americans do not. So even though, half the people could have the ability to tap into their 401ks, ultimately, those are folks who were saving anyway, the ones who were saving in retirement and, which could then be used for saving for houses. Well, unfortunately, those folks have more resources to purchase a home in the first place because of their saving mentality for a down payment, or capability for a down payment. It doesn't really change the overall arching of, affordability problems that we have in this country, because sure, I might be able to tap into my 401k, but what if I'm in the Northeast and can't find a house that's affordable, or I just, honestly, my salary is $100,000 a year and I can't afford more than $400,000. And I live in a state right now where I can't find that. So while I love the fact that there's more opportunities for people, I don't know that ultimately it resolves our affordability challenges. Yeah, so these are the four proposals that have been put forth. I definitely want more information because I can't guarantee whether they're effective or not. On the affordability side, though, we are seeing the administration push really hard for, and the challenge, of course, that this is not nationalized, right? Like a lot of these things happen at the local level. They want to cut regulatory, challenges. They want to cut the red tape. They've really emphasized and push the idea of deregulation for housing construction so that it is easier for builders to build new construction housing, because that would reduce the cost. And if it reduced the cost to build, then we might be able to lower the price barrier of entry for folks coming into it. And they are talking about, sort of pulling back some of those FHA rules that surround it. Now, of course, you and I both know the loosening of borrowing challenges always sort of, makes me go, oh, what about 2008? But at this point, I would say that a little bit of loosening of those reins is probably not a bad thing. Of course, ultimately, in 2026, we will see the bringing in of a new Fed chair. And I do think that the new Fed chair is definitely going to be a little more interested in reducing the Fed base rate, and might not be quite so hawkish, right? So these are the things that are in store for us. Let's hope that it works out well. And I think the hardest challenge we've got right now is that, we keep talking about affordability, and the administration wants to do something about it. Like they do, they really do. But a lot of the things that they do send, in some ways, some very mixed messages about how they feel about helping people with their housing, right? We already know that the administration has made significant cuts to, HUD's affordable housing programs, their rental assistance, their homelessness programs, of course, which, so these are voucher grant programs, et cetera. They've done a ton of cuts to those, which is very challenging. And they've cut a lot of sort of permanent housing programs, which can be read as not exactly pro-housing. You add on top things like, tariff and construction costs, which unfortunately have skyrocketed under this administration. The deep cuts to the rental assistance, Section 8, for instance, once again, taking away housing options for lower income families. And really it's just very confusing, right? Because it's like, well, we want to make things more affordable, but by the way, we're going to take away all these things that help you with housing. So I think it just makes it very difficult for people to understand. And in that case, it forces, you and me, the consumer, for us to be, we find ourselves on the fence because we're like, what's going to happen, right? The truth is, you and I both know our lives move forward, and we're going to do what we need to do to ensure that our family is in housing and is safe. So once again, just to sort of, kick off the end of this video, if you have enjoyed what we've had to say, if you like and value it, please like, subscribe, comment. Oh, and if you don't have information for this, you're welcome to reach out to us, 917-992-3098. We do have a home ownership boot camp coming up for Saturday the 24th. So like I said, just shoot us a text at that number if you are interested, and I will set it up for you. All right, guys, thank you so much. We look forward to speaking to you again next week.